Firstly, hey, Siddharth, thanks for joining in. I think we're joined by our team as well. And it's been a while since I've known you. It's been about a couple of years now. The first time I actually saw and spoke to you was in the account aggregator event that was held in Mumbai, which was about 2023. I think ever since then, a lot of it has grown in the industry. So thanks for joining in. Usually we kind of keep this in the office. That's how we wanted to start it, but then realize, of course, a lot of folks would not be able to sort of make it, and it's a lot easier to be done in this way, certainly. And so appreciate it. Would keep it super candid. A lot to deal with assets, a lot to deal with account aggregator, a lot to deal with regulators during the course of the conversation. I would not sort of put you in a spot. I try not to, but essentially the idea is to get the best outcome for the folks who are building in this space, which is our team, and certainly to understand a lot more as to how will the regulator be thinking, or how would certainly the future look like for something like this, right? So I mean, over to you. I'd love to know sort of, yeah, you seem pretty young, and you are pretty young, ideally, right? So why would you even think of doing sort of a social service for the country, in whole lines of building the digital public infrastructure and the whole account aggregator space?
Thanks, Shreyans, for hosting this, and definitely looking forward to today's conversation. And a shout out to everyone else who's joined in virtually from your team. I mean, personally, to your question that you asked, I've never thought about it. Like, I genuinely don't think age has a parameter in any of these things. For me, when I started working on Account Aggregator, it was about 2016. I was just fascinated by the problem. I was just fascinated by the idea that we could give individuals control of their data. And how do you really operationalize that idea and bring it to life? And so that's really what piqued my curiosity and sort of drove a lot of the work that I've been doing over the last few years across both legal areas and technical areas. And that's how it's always been. So for me, I was just really fascinated by saying, how do we take this idea and execute this for 1.4 billion people? Because they can, if they're given control of their data, they can actually benefit from it by getting access to credit, getting access to other financial services like insurance, better investment advice, and not just in financial services. You could then apply this to healthcare and health information and telehealth services. You could apply it to skilling and credentialing, and access to those types of opportunities in terms of jobs if you have access to your own skill data and credentials data. So for me, it was really looking at the idea and saying, let's just go along with it and see what it takes to bring it to life, whether that requires technical interventions, whether that requires, eventually co-founding Sahamati. A bunch of those things were just part of the journey. I mean, I didn't expect much of it when I started, but they all sort of played out over the course of time.
Very cool. So I mean, the folks who have been inspired, and the folks that have started working on this, right? And they've been plentiful. After certainly seeing the rise of digital public goods, and the infrastructure built in various other layers of India stack, be it the identity layer and the payments layer, so on and so forth. Of course, the next way to do was sharing the data, and then looking in data in terms of assets, liabilities, so on and so forth, right? If you had to sort of go back and say, hey, what would an account aggregator's definition would be, or what would a Sahamati's definition would be, right? Because both are very different. How would you sort of explain to that layman of what it is?
Yeah, so I mean, at the end of the day, account aggregator is nothing but a means to an end, right? So when we give people control of their data, what they're particularly interested in, individuals or even say small businesses, is what opportunities does this give me access to? For example, can I get access to better lending offers than what I would get before? Or before I wouldn't get any offer, but today using the system, I could. So really, at the end of the day, this comes down to data being a means to an end, and really bringing in financial institutions and other innovators that can build out better ends for that individual or small business. And so, really, from a very layman perspective, what account aggregator, the context in which they will often understand account aggregator is in the context of that service that is being delivered to them. And I think over a period of time, they will start to develop an understanding of, okay, this is acting as a manager of my consent. I can use it for, not just financial data, but tomorrow use it for other types of credentials. Day after, it could act maybe as a data wallet for me. I mean, there are many possibilities that open up as this ecosystem starts to grow and as it starts to mature. But in the early days, I think a large number of people would really understand it in the context of the service that's being delivered to them.
Got it. And in respect of account aggregator, I'm sure it didn't come off as an account aggregator in the early days, right? Like I'm talking about when you started your company first and then moved on to doing something like this. How would you even imagine a scenario where the regulators would not be so open about this back in the day? I'm talking about 2016 or so. Is that why you formed a Sahamati, or what is the role of Sahamati in this?
Yeah, no, in fact, the regulators have been extremely open. And Sahamati plays a complementary role to the market on one end and regulators on the other end. So we really, I mean, like I said, I've been working on account aggregators since about 2016. At that point in time, co-authored the technical specifications because we felt the regulators at that point, in fact, took a historic step. RBI, SEBI, PFRDA, IRDA, all of them. So our capital markets regulator, insurance regulator, pension funds regulator, and of course our banking regulator slash central bank collectively came together along with the finance ministry to empower people with control over their data. And so that's really how the account aggregator ecosystem came to life because of the 2016 policy that they laid out, and RBI was in the driving seat of that.
Got it.
But the policy isn't enough to really realize the objectives of that policy and those principles that have been laid out. A lot of groundwork had to be done. The first step was, of course, technical standards, and that subsequently got published in 2019 because it also took quite a bit of time. This hadn't been done anywhere else in the world. It hadn't been done at this scale, at the levels of diversity that we have in India, sectoral diversity, and of course, diversity of consumers that could potentially use this system. And so, for many of those factors, we had to do a lot of ground up thinking of what those user flows could look like, user journeys, how would it come together, how would this system work in an interoperable manner, so on and so forth. How would you really create a playground where regulators can regulate on one end and innovators can innovate? So that took a bit of time, and then that reflected in the technical standards being published in 2019. But after that, we also realized that a lot of work had to go into activate the market and activate the ecosystem, because just the sheer diversity of players that are there. We're talking about banks within banks, you have public, private sector banks, small finance banks. We have fintechs. You've got asset management companies. You've got insurers. You've got registered investment advisors. So, there are hundreds of different categories of companies across these sectors that exist in the account aggregator ecosystem space. And all of them had to come together and each had to do their bit, and their bit varied depending on the role they played in the ecosystem. So you needed a forum that really brought them together, and that's really how Sahamati got set up. So it was really complementary to the regulations that were laid out, which in my view were quite visionary by our financial sector regulators and the finance ministry. And then over a period of time, of course, Sahamati's charter evolved. But what really excited me the most about setting up Sahamati was really the idea that the market could come together and address a range of these problems. Typically in India, we often wait for top-down intervention. We often think Things only get created when we get a directive from the top. And I think it's very important for us to also solve problems in a bottom up manner with the right top down frameworks being put in place for guardrails and things like that. And in my view, the account aggregator ecosystem is a first of its kind in India's financial sector that is, bringing such diverse players together on common norms as part of a common and shared playground. Because previously, most of the infrastructure was siloed to banking or capital markets or insurance. But those are artificial silos. To an individual, my assets cut across these boundaries. We may have created these silos, but an individual doesn't care about those silos. They just care about how they access it in a unified way. So really, Sahamati became that mechanism to create that unification, to create that harmony, to create the establishment of common, very operational norms with different market participants.
Very cool. So I assume that hey, you did this in 2016, 2019. The first specs were launched. At that time, UPI had already taken off. We had already seen the uptick of UPI, and all the banks and financial institutions are obviously sort of busy counting UPI numbers, and the success of UPI has been celebrated very vastly. How and how difficult was it at that point of time to even convince a bank, right? Today we sell to banks, we find it like, obviously extremely difficult to go through. I would love to understand how difficult was it to convince the banks to come as an FIP in the first place, and of course as an FIU in the second place, right? And FIU, I think everyone enjoys it. But what are these FIPs, FIUs firstly from your side, and then how difficult is it to convince them to come on board?
Yeah, so I mean, just so that for people listening in, they're familiar with the vocabulary, what Shreyan's mentioned is within the account aggregator ecosystem, we have entities that are called FIPs. These are financial information providers. These are custodians of your information, like a bank, insurer, mutual fund, so on and so forth. You have FIUs. These are entities that want access to your data, so they're financial information users. And you have AAs or account aggregators, which help you manage your consent. So we may use some of these short forms during the course of the conversation. And but back to your question, I think it's been an interesting journey. Personally, I always believe that people should have control, and if they're given control of their data, that unlocks far more value for everyone, and really operated a lot just with that sheer belief. Uh, and surprisingly, what I noticed was that a lot of people, even at the senior levels, say at a CXO level within banks, actually shared that belief. So I had a very contrary opinion because a lot of people would tell me, I'd often go into a room and everyone would be like, "You must be crazy. Why would a bank ever share their data? It's just not possible. It's not something that's heard of. There's no incentive for them to do that. Yada yada yada." Right? And that would often be the norm. In fact, why would anyone become an account aggregator? Why would anyone participate in this? This is a non-starter. Fast forward few years, the account aggregator ecosystem is now about 600 financial institutions, right, and the largest in the world. So clearly, there are a set of incentives that are working for market players that are driving their adoption. And what I realized early on is one, if you look at it from an India lens, particularly given where we are growing as a country, there's enormous expansion of the pie that is available for all. And so account aggregator is fundamentally infrastructure that allows you to expand the market. It creates new markets. It creates new markets on retail credit, on SME credit. It creates new markets for investment products and similarly for insurance, which is severely underpenetrated today. Because any financial service, if you unbundle, comes down to the flow of money and flow of data. Flow of money we resolve through UPI, and that democratized access. The flow of data is essentially what we are democratizing through account aggregator, which means you can now piece together any financial product and create new financial products that weren't possible before. And by doing that, actually create new businesses or create new lines of businesses if you're an existing enterprise. And so that was really the belief that if individuals are in control, they will be able to access better services, and those better services will expand the market for all. And I think over a period of time, we found a lot of early adopters, and I would actually give credit to the early set of financial institutions, which actually included most of the largest banks in the country who decided to come along and partake in pilots and proofs of concept and so on and so forth. Also, because if you look at the financial sector, it is actually built on the back of shared infrastructure. Whether we look at payments, the ecosystem of payments does involve shared infrastructure through settlement agencies. Similarly, in capital markets, you have shared infrastructure through depositories and stock exchanges and so on, clearing houses. So within the financial sector, and even if you look at data, people would often have the same hesitation for pre-credit bureaus. People would often say, why would I share my credit data, my borrowing information as a bank with anyone else? That's proprietary. And every bank would say that, and no one would believe that they would actually pool all their borrowing data together in now today's world, what are called credit bureaus. But they actually realized that if they do that, then borrowers would leverage the information asymmetry, go into over indebtedness, and that would affect all of them. And so they started to pool data, and we saw when you shared borrowing information, the retail credit market in India dramatically exploded. And you can actually track that to the introduction of credit bureaus. So if you actually go back in time, there have been many examples where sharing of information actually grew the ecosystem for all. And so, really, account aggregator is just unlocking the other side of information, which is the assets. Liabilities are what are part of the bureau system today, and to some extent. Account aggregator unlocks access to your asset information. And sharing of that, what we're now seeing with the data coming in from the implementations, it clearly validates that hypothesis. I mean, there are very clear top line, bottom line benefits for large financial institutions and even small players to then capture more of the market. So I would say in the early days, yes, there was often a perception of saying, why should I participate? And, what is in it for me and things like that. And people would have those concerns. But I think it's good to see that that cycle has moved on and the ecosystem has matured along the way.
So you mentioned a couple of interesting things, right? Like, so I assume 2019 you had launched and then you had done a few pilots for a year or so. And how long were these pilots for? What were the pilots, essentially, were they for just one particular use case that you talk about, like, underwriting or loan monitoring, or what were the pilots actually in for?
So the pilots were really testing a couple of things, and they ran for almost 2 years, right up to 2021. So the pilots were looking at things like user experience. Will these flows work? Is it convenient for a user? Will there be a grant informed consent, so on and so forth? Then the pilots were also to test the technical standards itself. Do the technical standards work? Are people able to programmatically communicate with each other? These were sort of the two main areas, in addition to, of course, validating the hypothesis that if this worked, this would benefit the individual and benefit the financial institutions in creating new types of financial products. So people really envision these pilots from that lens, and you had pilots looking at things ranging from lending to other use cases along the way, particularly investment use cases. And I think there was also maybe one insurance use case as well.
Very cool. So you've done your pilots now. You've understood how it works. You've understood that, hey, data sharing is pretty seamless. The user experience is still picking up, but of course has a long way to go. And this is what you're thinking in 2021, I believe. But have you computed the whole idea that, hey, how does the data security look, right? Because assume but now you're sharing data, and Indians being so used to sharing a lot of data back and forth, because we are so used to, there's a saying that we're so used to just sharing OTPs all our lives that everything requires an OTP in India, right? I'm curious to understand how does the whole data security in this infrastructure play?
Yeah, so we actually thought very deeply about data privacy and data security. And the first area that manifested was in the technical standards itself. The very idea of account aggregators as your managers of consent who cannot store your data was driven by the principle of privacy by design, where individuals now have an agent with whom they can grant informed consent, manage their consent, revoke it, so on and so forth. And we're probably one of the first country in the world that's operationalizing informed consent. Many countries have that in their privacy legislation, but we are actually making an attempt to bring that to life for actual people on the ground. So I would say one area it really we thought a lot about was how does that get embedded within the technical standards. Similarly with security, and so the use of digital signatures to ensure the integrity of the data is maintained, the use of encryption and end-to-end encryption to ensure that no person in the middle gets access to your data when they're not supposed to. And then you also have regulations, the account aggregator directive prohibiting account aggregators from storing data. You had the recently passed data protection bill, which is now an act, which really creates a much stronger framework and makes entities that access your data accountable to using it in accordance with terms of the consent. And if not, then there are severe violations and penalties that would fall upon them. So I would say, really, from a privacy and security element, a lot of effort went into designing as much of that within the core technology. And then, of course, that is never enough, that is never sufficient. You'll always have edge cases that come in, and ensuring that both within the regulatory framework and within the larger legislative framework, there are safeguards and mechanisms to make all the actors accountable, is how we sort of ensure that security and privacy were really strong within the ecosystem that's being built.
Awesome. And so with the whole thesis of now the whole data flow from say a financial information provider gets to the financial information users with the help of the technology service providers in between that help you sort of convert and encrypt decrypt the data. With all the security guardrails, I assume that now you take this as a package, go to a financial information provider or a user to say, hey, now start using it. I would assume that initially, of course, you'd not see it take off because of the sheer capabilities and complexities of a financial institutions that it already has, right? What would be that tipping point in the journey of the whole account aggregator where it actually see it take off when a lot of them use it as scale? Is it because they seem that this is a lot more cost effective? Is it because they see it a lot more digitized solution for them? What is it that actually made it take off in the years of say 2022 and beyond?
Yeah, I mean, in my opinion, see, we are playing a 10-year game. From a Sahamati standpoint, we are really looking at this ecosystem 10, 15 years out.
Sure.
And then saying what are the robust foundational building blocks that need to be put in place to ensure this ecosystem grows sustainably over decades to come, right?
Sure.
And so therefore, we have an extremely long-term view. While we act in the day-to-day, we have an extremely long-term view of how this ecosystem should shape up, play out, and that ensures that, okay, some things may take time. Would I like it to be faster? Of course, I would like these things to be much faster than the pace at which they roll out. But that is the nature of building anything new. I mean, what we're building out here is cutting edge infrastructure that hasn't been built elsewhere in the world. So we don't have templates. So the ecosystem is going to take time to learn. It is going to make mistakes. We have to learn from those mistakes. It is going to try different things before it figures out this is what may work. In some cases, the hypothesis may play out, in some cases, it may not. And that's inherently the nature of doing anything new. Now, we may have, in many cases, just imported stuff and therefore not been familiar with building things from scratch. That often creates a lot of anxiety and, questions, because anything new tends to be also a bit messy in the early days. But really, from our standpoint, that's where we see us playing a critical long-term role to orchestrate this ecosystem, such that we can ride out some of these waves. And we've seen that ecosystem grow. I mean, from it was zero for a long while to the numbers that we see today. right? And I still feel this is just the start. So we've just scratched, less than 1% of the potential of the account aggregator system, even though there are 600 institutions, 2 billion accounts, and over 60 plus million successful consents. It's still less than 1% in my view. And so what we saw in the years post the pilot was really people taking time to understand the potential of this, people then working out different products that they could build against these specifications, they themselves figuring out how these products could fit in to the different workflows that financial institutions have. Do you create new workflows? Do you embed it into existing workflows? Really, how does that play out? And so I would say a lot of, and this is why it's slightly different from UPI, because in the case of UPI, I can move money to you and value is realized straight away, right?
True.
But in the case of account aggregator, I can share data with you, but then you have to build a whole new product on the back of that data for this to be meaningful. And that takes time. It's not easy to rewire your systems or build a new product. And that's where the years go by in actually building out those new workflows. But of course, over a period of time, a lot of that will get heavily productized. I imagine people will build, better drag and drop, no code, ways you can embed AA in like hundreds of workflows or launch new products. And I think that's the healthy technology ecosystem that's being built. But in the initial years post the launch, that's really where we saw a lot of time going in, which is people just fully absorbing the concept and then working through new infrastructure that they had to build on their end as FIPs, as account aggregators, as FIUs, as Sahamati itself, to actually bring this to life.
Very cool. You actually brought a very interesting point, and the point was, hey, now I've thought of this as the base layer of just sharing data, and there would be multiple other entities who will figure it out and build products on top of it, right? Much like say what an internet would give us as a base layer, and then there would be multiples of applications that come by, and you build on top of that. What would you see in terms of the whole idea of the industry taking off in this particular area? Because we have seen account aggregators have a certain sort of a usage code or a code that essentially deals with loan monitoring, loan originations, or a personal finance management, so on and so forth. But I assume that's also the base, right? Beyond that, there would be a lot of players who would make a lot of actions on top of it. How do you see this whole play out in the next, whatever few years that you see that, hey, I would see that account agree and obviously you would have a lot more ideologies on top of that. How do you see that it play out in building the use cases on top of it?
I mean, I would actually ask you that question before I answer it.
Sure.
What attracts you to the account aggregator ecosystem? I mean, you're one of the companies and entrepreneurs that is actually thinking about those use cases and those new types of innovations that you can bring in. So, how do you see it?
Sure. I mean, we have thought of a few, of course, right? I think our whole thesis is to figure out how the base layer is formed by institutions, right? I think the most important work or the groundwork had been done by players like yourself. That also gives us an opportunity to even take part in this ecosystem. It is not easy to get your 100 institutions that are FIPs. It's not easy to get your 600 odd institutions that are FIUs. It's not easy to build in the 14 odd plus 17 odd AAs. I think the for us the ability to just think of the data being available at one stop shop was is a far fetched dream that it had become a reality. Of course, the use cases is always in line with what the regulators put in, and then you have to sort of build building blocks around what the regulator sort of sings along with it, right? So we have thought of that as well, right? We have built credits, we have built a lot of analytics AI around it, a lot of investments that we think of it, because we think that this is the base. But it's not me who's talking right now. I would love to hear you what you see of the future of something like this, on essentially building the future of what would just not just be a core data sharing process, but a lot of building blocks on top of a data sharing process, right? And that essentially builds a new layer of India stack. Over to you on your thoughts on how you think and how the regulator seems to be thinking on this. I would love to hear, and I'm sure everyone over here would love to hear that as well.
Yeah, so I'm of course not speaking on behalf of any regulator, and I cannot opine on what they think. I think they are best placed to communicate what they think. But I can only share what I think and my
Sure.
sort of personal thoughts on how I see this evolving. I mean, at a very base level, even if I step back from account aggregator and all of these terms, I think at a very base principle, uh, giving individuals in control of their data fundamentally creates an ecosystem where access to data is completely democratized.
Sure.
Now, when access to data is completely democratized, whatever kind of data that may be finance, health, telecom, education, so on and so forth, other private data you may have, e commerce, other transactional data. When access is democratized, competition shifts from where today it remains, which is about rent seeking on the back of your data, right? To actually, what can you do with my data? What are the predictions that you can offer? What are the insights that you can offer? What are the new products that you can create? And so today, and this was largely driven by the internet economy, where we created a lot of these data brokers. So basically, data itself wasn't democratized. It remained with these brokers, with these repositories. So a lot of innovation got concentrated around there. Fundamentally, what we're doing is democratizing access completely, which means it's an individual's data, a business's data. They can share it with whomsoever they want. So now every company has to actually compete on saying these are the higher quality products and services that I am willing to offer you if I want to exist in this ecosystem. And that's great for companies, that's great for individuals as well. So that's one principle that we see playing out. And that's what a lot of the ecosystem, even what you mentioned, is focused on saying, given this data, what are those additional insights for things as specific as credit underwriting? And within credit underwriting, you could go very deep because you could be underwriting different customer profiles or creating different, risk buckets. You could create different cash flow lending products, but not just at the time of underwriting. You could now extend this to the time of collections, to monitoring, and so on and so forth. Right? So there can be different types of predictions that you create because the access to data is now unlocked and given back to the individual. I think the second thing what it does is it really unlocks a lot of value um, across sectors, but across countries. Because in my view, the only way we will be able to, much like the internet, which works across sectors and across countries, it's a universal infrastructure, but we layer rules on top of it depending on the sector, depending on the activity. Um, Access to data should be a universal right. And so the only way we can operationalize that is not through bilateral agreements or expecting, governments to come together and sort of come to terms on how Indians' data should be shared with another country, so on and so forth. That's not going to happen, or it's going to take a lot of time, years. And you have 193 countries, 193 into 193, just way too much time. So the only way that will work is if we pivot to a model where individuals are in control and they are driving that data sharing. And that will even allow you to unlock use cases across borders. Because today you can take your own financial data physically, or you download those PDFs, or take your own health data and upload it to a doctor in another country for a second opinion, or vice versa. So really, my view is a lot of the innovation will get focused on the layers above of predictions and additional insights. That's where all your AI will come in as well. And the base infrastructure is just unlocking access, but that access it's unlocking in a unified manner. It's not siloed to each sector, but it's unified across sectors and unified across countries. And I would say a small version of this is what's playing out in the financial sector today. But that, like I said, is still very early days because tomorrow I could merge this with different types of transactions. I could share like my credentials that then enable cross-border flows. I could share my credentials that then, like, let's say I have different credentials that tell you I own this particular property, then you could lend against that property. So it just unlocks so many more transactional flows that we can't even think about today because you're just sort of, stuck with these different silos that are out there.
Very interesting. I think you touched probably the most sort of important point that I'm sure myself and a lot of my friends and would ideally think back in the day, right? A lot of us went overseas for education. A lot of the data sharing that used to take place was still on PDFs across countries, cross borders, so on and so forth. Let's double down
Yeah.
on something like this, right? The whole ability where there would be an institution or an ideology. Now I've just mapped all of the assets in India. How do I even dream of making it a level playing field across borders where the data has been shared secured in a very secured manner, but not just the data being shared in a secured manner. Another institution, say, from the US, a financial institution can also start taking an action on the consumer data as long as the consumer gives sort of consent on top of it, right? Let's double down on this in three ways. The first way is the technological capability of it, right? The second way is the regulation capability of something like this. And the third way is the ability where, hey, I've shared all of this data, the possibilities of what it can reach to, right? In terms of the sheer technological capability, what do you think is required to ensure that something like this can go beyond in the Indian borders and say that, hey, now there is an ability to share the data and there would be institutions or technology players building on top of this data. What are these three broad capabilities that would be required?
Yeah, so I would say that's a extremely important question. In fact, before I answer it, at least one way I view the world is what we're enabling, both as part of account aggregator, but even as part of the larger digital public infrastructure movement, is what I would call the three U's. The first U is user centricity, which is really ensuring these ecosystems are designed around the user. The user could be an individual or a business, and they are truly in control.
Hmm.
Now, we saw that in a limited manner with UPI, where we gave them control of their money. We see that in a limited manner with Account Aggregator, where we gave them control of a subset of their data. But this can be a lot more because, as you described, your assets are far more diverse. So we can imagine an architecture, and we actually started asking the question saying, if we can do it in these sectors and do it in these areas, why can't I do it for any asset? Why can't I be in control of any asset across any sector, across any country? And so the first view is really how do we design these ecosystems, putting users in the center? Because I think that's going to be a key to unlocking any regulatory or technical solution for this as well. The second aspect is unification. How do you unify across diverse environments? Because when we look at it, even in India, if you look at the account aggregator system, you've got extremely heterogeneous sectors. You've got banking, which is very different, different players, different regulations, different self interests. And you've got capital markets, different players, different regulations, different regulators, different self interests. You've got insurance, completely different, pension funds, completely different, tax, even more different. Now, how do we create an architecture, even an account aggregator? Given these differences, how would you actually ensure that the individual is in control and across any sector can share data? That was an example of the unification thinking that went in place, where each regulator maintains their own autonomy, has their own sovereignty, can layer on their own rules. So you're not bringing everyone together and saying you bind to common rules. No, it's completely federated. Similarly, in UPI, the UPI is nothing but a protocol that allows you to transfer value from one store to any other. We just started with value being currency, currency being INR, INR store being bank accounts. But very soon you saw the regulator unlocking that for wallets. And in fact, recently they unlocked it for credit with no change in the foundational infra because the protocol allowed for unification. Now, when we think about diverse sets of assets, the principle of taking a unified approach becomes even more important because now across countries, countries will have different jurisdictional norms, just like sectors have different jurisdictional norms. So how do you unify? That becomes very key. How do typically what happens is a lot of us think of solutions that enforce homogeneity, but homogeneity also creates exclusion. So, how do you embrace diversity? How do you embrace heterogeneity? Heterogeneity of the technology, heterogeneity of ideas, heterogeneity of regulations, yet unify so that the user is in control. And the third aspect, so we spoke about user centricity, we spoke about a unified approach. The third U is universality. And I think that's extremely key. I think if we need to unlock this at an international scale, we need to ensure the infrastructure, the technology infrastructure, much like email, for example, the foundational tech infrastructure has to be universal. It has to be available to all. It cannot be, I only deploy this tech for a particular banking sector or capital markets or properties or a particular country. The foundational tech has to be made universal, but you can program your rules, your sectoral rules on top of that, like a smartphone as well. Smartphone's universal infrastructure. So the smartphone is not regulated by the banking regulator or regulated by the capital markets regulator. If you so happen to create an app that accepts deposits, then of course the banking regulator in that country will get involved. Or, if you start to seek investments, then the capital market regulator will get involved. So how do you ensure that people can regulate the activity and the flows, but the infrastructure is open? So I do feel that we are at the coming together of user centricity, unification, and the possibility of creating unified infrastructure, unified and universal infrastructure. And I think a lot of the building blocks, a lot of the existing building blocks, base technology building blocks that have been implemented in the DPI ecosystem, and some of the newer building blocks that the crypto world is bringing to us as well. I think there's a lot of interesting thinking that's happening there that one can leverage, along with the rules that the existing financial system has worked out, in some cases over centuries. I think if we can converge these, then pretty much the dream of an individual being able to control all these diverse assets and then enable different workflows people can program on top of these assets can then be unleashed.
Very interesting. So you are telling that, hey, I would not take the approach of going and sort of integrating with the regulated sort of bodies like how we have regulated in India, but at the same point of time, you would say that, hey, we would give the control to the end users. Now, these end users would be able to share the data. How would that look like? Would that also seem like, hey, the end users then sort of, liaise with their own country regulators, or how would that work at a global level when you have to? Because today in India, it seems a lot more sort of, straightforward thanks to the work that has been gone through the whole AA ecosystem. But how would it look like for, say, for a Siddharth sort of, to share a data that he or she might be, that he might be holding, say, in a country like the US, right? How would that sort of discussion with the regulator
How
go?
exactly how it looks today? Can't you download your health records and upload it on a portal of a US doctor today?
Got
Can you
it.
do that?
Hmm. That's possible. Yeah, I do think I can
So
possibly
how
do
do we
that.
create? It already exists.
Yes,
Are you able to, do that in a physical manner? You can. But how do we create the digital rails? How do we ensure that's interoperable? And how do we ensure that you can do it for different types of assets, your data or other types of financial assets? That is the key question. But a lot of it, in fact, already happens today. So it's, not that far-fetched. It's just a simple plus one on top of what exists. And in fact, you should take a look. We recently published a paper on this. It came out a few days back.
yep,
We've called the Finternet,
yep.
and that sort of offers an initial line of thinking around how we see it. To answer your question more specifically, but I don't think it's that difficult. It is, a lot of the flows already exist today. It's just that the tech, like, let's look at cash. Cash. When you give me cash, physical cash, that settles atomically,
Absolutely. Yep.
right? But when it comes to a digital world, we have these long drawn out settlement processes. Now ask yourself why.
Hmm.
It did
Abs-
make sense, same in capital markets and so on. Why? If physical shares, physical money, cash, Physical shares also in the old days, share certificate. I gave it to you, it was settled there and then,
Sure.
right?
Sure.
But then, of course, we tried to digitize. And in the process of digitizing, there were certain risks because of the time delays, so on and so forth. So we created structures around that. But I think now the technology is at a place and connectivity is at a place because all of us are connected thanks to the internet and quite speedily connected thanks to 4G and more developments on top of that, that you can imagine, things being settled atomically through the network
Absolutely.
from another. So I think now's the time to reimagine a lot of those core building blocks, but I don't think they're as different as some of the workflows many of us actually operate in the physical world today.
Got it. And so these would obviously be with respect to your sort of digital assets, right? Like, or your digital data workflow that is there, and seems a lot more sort of possible. What would you think of, say, physical assets that are there around us, right? A lot of countries you'd imagine, including India, the physical assets are a lot more. How do you imagine a scenario where, hey, even I can tomorrow be able to sort of download my land record certificates and in a very seamless way? Because that is a lot more messy. How would you imagine such a scenario as well?
Yeah, so I think it's important to realize, and we implemented this even in the account aggregator ecosystem, is when you're rolling out any society scale, population scale infrastructure, not everything is going to go live at the same point in time.
Sure.
So, how do we design for an approach that is evolvable? How do
Hmm.
you design for an approach that doesn't require synchronization, that doesn't require every actor to be sitting at the same table at the same point in time to make a decision, which will never happen,
True.
or not happen, at least in your and my lifetimes?
Sure.
How do you design for an approach that doesn't require centralization? Because any large scale problem is not going to work if you centralize all activity.
Absolutely.
And so, therefore, both in the account aggregator system, we designed for asynchronicity in adoption. People could come in at different points in time, and we still see new entrants to the account aggregator ecosystem. But when they come in, they plug into a common network. We design for not expecting there's one central authority. In fact, that's why sometimes it's difficult for people to understand the account aggregator ecosystem because it's so federated. We often talk about decentralized and federated architectures. Internet is a classic example, but account aggregator is another example because you've got a federated approach where you have different sectors, they're regulated by their own regulators. So, governance is federated as well, yet it's unified for the end user. So going back to the point you made on things like physical assets, like property data, now, of course, certain regions in the world may have clear titles, and therefore will be much easier for them to represent those titles and those claims digitally. Certain regions in India may not be the case,
Hmm.
but India is also not homogeneous. Certain states in India may have much clearer titles, and there are quite a few states that have done a lot of work on land record digitization and clear titling and so on. So they may be the first ones to adopt. That's perfectly fine. Other states will come along later. Similarly, some countries may adopt it initially, some may come along later. So you'll always see a continuum. Some assets may be, born digitally native, like digital assets, NFTs, with all of these claims represented digitally right at the get go, right at their birth.
Sure.
And some assets, like properties, may require a process with which they're converted into a digital representation, and they may take their own period of time. And that's okay, as long as you have an architecture that allows coexistence of these different actors and allows them to participate over any period of time as and when they feel comfortable.
Absolutely. So now you've shared the data. A lot of people now use the data for a lot of stuff. I'm still, and I'm sure a lot of people like me are still curious, what is in it for the folks who are sharing the data, right? Because the folks who are sharing the data can also consume the data. An FIP can be an FIU, so on and so forth, right? How would the future look like for the folks who are sharing the data at scale? Would it be like, I'd assume that they would want to be incentivized, and how would sort of a structure where on them sort of allowing to share the data be incentivized look like?
Yeah, so I would say a couple of things. One that's foundational to the account aggregator ecosystem is the principle of reciprocity.
Sure.
And this exists in many other networks as well, including card networks. So if you want to be a consumer, you have to be a provider. This exists even in credit bureaus,
Yes.
right? So it is a foundational principle. It is a market-driven principle that, in fact, recently RBI as well laid out regulations for that a couple of months back.
Sure.
And I think that's a key driver. So banks are inherently, banks or other financial information providers, in my view, are quite aligned with individuals being in control of their data. They're just the custodian. As part of the principle of reciprocity, they want to consume it for their different use cases. Therefore, they have to share it. That being said, of course, there should be some sort of compensation model for the work that they have done in maintaining that system and sharing that data, and that's perfectly fine. And I think we'll see some of these models evolve as the ecosystem matures. And we'll also see, things around SLA agreement, performance agreements, and other quality of service assurances coming in to ensure that data is made available in a high quality, timely manner. And so I think that's really the direction it would evolve, where most of the incentives are really down to the principle of reciprocity, and then, of course, them being compensated for the work that they have done. But really, most of the opportunity exists for all of them as a value, as consumers of that data and the new products and services they create. And I do see much more norms coming in place to ensure higher quality of service across the board, across different FRPs over the next few months.
Absolutely. So I do think that at the moment, at the rate at it is, of course, it's a lot more consumable. The prices of consuming a data are not to a level where, say, the other sort of asset sharing API companies across the world are like something like a played in the US, so on and so forth. They are still a lot far more expensive in consumption, a lot of data. How would you sort of put in and do an apples to apples comparison, or even apples to orange comparison for someone like, say, the regulator pushing for a framework like this versus, say, an entity, a private driven organization in the US that essentially shares the same kind of data but for citizens of the US and the other sort of countries that it functions in?
So, have you read about Section 1033 of the Dodd-Frank Act?
I honestly haven't, but I would probably read after this. But what does it talk about?
Strongly suggest you read it, because if you look at the developments in the US as well, and also look at the recent consultation that has been held by the Consumer Financial Protection Bureau, CFPB, they've held pretty extensive consultations on the topic of data sharing.
Sure.
And this case in particular, bank data sharing. And they are in fact actively legislating a framework around which banks and other financial institutions would be made. In fact, from what I've read, they're expecting it to be even more mandate driven. So these would be mandated to share their data. So I don't think Plate is an appropriate comparison, because a large part of that data is screen scraped, and screen scraping is fraught with its own issues. In one case, it is illegal in many jurisdictions. In the second case, it is also fraught with privacy and security violations from an individual standpoint, because I'm giving my username and password out. And in fact, it's not, screen scrape data is not the strongest data, because I can't verify its authenticity. Many a times, if there's a change in the user interface, the data model breaks down, so on and so forth. So it's a bit flaky. So I would say, we've seen solutions where screen scraping is used as an interim mechanism, but I definitely don't think that's an appropriate comparison. And within the US as well, when you read up on 1033 and CFPB's work, you'll start to see that the legislators are taking an active view on creating regulatory frameworks for enabling data sharing beyond just the current market-driven frameworks that are there.
Got it. And so you've touched probably the most important point, right? I think it's an apt end to the conversation as well in understanding of the existing practices that are there. Of course, we are here to sort of do good to the industry. I think the industry has already sort of started taking its shape on the consent-driven mechanisms. But India is still filled with a lot of players and participants who still enjoy the whole ideology of scraping screens or sharing data in ways that the consumer does not enjoy, right? There are big companies that still continue to do that. How would that look like, and how will that transition be from something that is so obvious to Indian consumers and businesses that they've been doing it for a decade plus now, to moving into something that is not so obvious, but has to probably take its shape thanks to the regulators sort of showing the way, and thanks to the folks who are leading the sort of charge in making it a very consent driven, from a phase where it's completely sort of screen scraped or the data being acquired from different avenues and sources, to a very consent driven mechanism.
Yeah, I'm not sure why you actually feel it's obvious for consumers. In fact, do you know your username and password by heart at this point?
For most of the screens, yeah, I mean, I do know my usernames and passwords for a lot of stuff. That's true for sure.
Like your complex bank account password, you remember that?
I mean, I do, but that's what, yeah, that's what I do remember. I tend to remember most of my passwords. But I wouldn't imagine. I would imagine a lot of them wouldn't know that either, for sure.
Yeah. And so as a result of that, what we see even on the ground, most individuals aren't very familiar with the net banking flow of a username and password.
Hmm.
It doesn't work in a mobile friendly, mobile first sort of world. And so even if you look at it from that lens, keep aside the other risks and, data quality issues and all that I mentioned, it's not a solution that actually works at scale. It's not a solution that hundreds of millions of individuals are using today. It's just a tiny subset of the market that uses it today. So fundamentally, account aggregator is not serving to disrupt a screen scraping market. Of course, it provides a much better alternative to that for all the players. But at the end of the day, it's just completely expanding the market where individuals who are not able to share data, their own data before, or they had to physically run around to 10 different branches or 5 different branches to collect it, they now have the ability to, at a click of a button, in a safe, secure manner, share it. And so you're completely opening up new markets. And so I don't see, screen scraping in that sense to be as big of a transition merely because of the fact that it's just touching a very thin sliver of the market that stands today. And we've already seen jurisdictions like the UK and other jurisdictions that have made that illegal. So I think that's something to be cognizant about as well.
What do you think of the Indian jurisdiction? Sort of, talking about the whole ideology of screen scraping and a lot of ways to get that. Because I do know today, in places or avenues on the internet where I put my phone number and my email ID, I would probably get an ad, or probably 3 4 ads in within, say, the next sort of few minutes. How do you see India playing its part in something like this?
In what way?
In ways of saying that, hey, screenscaping and the ability to sort of take data without my own consent is not the way to look at of businesses sort of evolving, because a lot of businesses probably still think of doing the same. And I would think that, hey, every single time when I probably put my own details on the internet, I would probably get an ad from that institution or the business. How do you see India sort of evolving on from this?
I think it's quite simple. The main focus here is ensuring businesses are given the tools where they can actually access it the right way. It's not so much in saying, you should not do it this way. Of course, again, like I said, I've shared with you the risks and the
Sure.
concerns in jurisdictions have. But fundamentally, the focus is one can share all of those concerns. But is there an alternate? Is there an alternate that is 10x better for individuals and 10x better for businesses in the long term? And account aggregator provides that alternate. And as long as that alternate can scale, lowers transaction costs, increases the access to hundreds of millions of individuals that wasn't the case before, then businesses have a choice to make. And they can actually make a fairly easy choice on which path they want to go down. So really, from our lens, it's about creating better alternates, better infrastructure as alternates, rather than just grandstanding saying you should not do both because it's bad.
Awesome. I think this was a sort of a great conversation. If anyone probably has any sort of a question, feel free to sort of drop by. But I thought holistically, this was essentially a quick glimpse of how the AA has transformed over the years. If you want to sort of say how does the future look like the next few years, right? Because obviously we have seen how the last 5 years have evolved. I assume the next five would be at a rapid pace. I would love to understand what does the future entail for an account aggregator ecosystem with the 100 odd FIPs that we have today, the 600 odd FIUs that I have today. Would it, be open to a lot more sort of players? How would a non-regulated entity come into the ecosystem in an easy way? What the future's all yours. How would you sort of, sort of carve that out?
Yeah, I mean, I'm extremely excited. For me, it's just so fascinating to see where the ecosystem is at, but also feel that we are still at, a stepping, very early stepping stone because there's a lot more. And I think a lot more in different directions. We've already seen over 2 billion financial accounts live on the system. We've seen the number of players you mentioned. Uh, but really, now what we are going to enter into is a period where people are really building out the kinds of use cases, the kinds of products that were not possible before. And so I do imagine, 3 years from now, you'll not even 3 years, we're already seeing statements being made from lenders a year from now saying every workflow of mine is going to be account aggregator enabled and I will shut out other workflows because those are prone to fraud and poorer customer experience. In my view, 3 years from now, it's essentially going to be widespread. It should have touched every single Indian, and they should have been able to access better financial and economic opportunities as a result of that. I think a large part of the last few years were built in building up the supply because if you don't have supply, none of the use cases can come to life. But now that it has been built up, and I think, of course, a lot more strengthening improvements will happen in terms of reliability and quality and so on. That's just a matter of time. All infrastructure goes through those evolution periods. I think really seeing new kinds of both technology companies and existing and new kinds of financial companies leverage this data and create those consumer experiences to what so far has been a bit of an abstract concept is going to be very powerful. I mean, we already see new types of apps that help you manage your money better. I mean, some of those experiences that people have created, developers have created, entrepreneurs have created, are they're some of the best money management apps I've seen in the world. And
True.
that's only possible because you built it on the back of this infrastructure. You couldn't have built it on the back of any other infrastructure. And these are just very early examples. If you look at lenders, they are seeing their onboarding rates increase 30, 40%. They're seeing fraud drop to zero. They're seeing there was this life insurer who, when they were underwriting customers the traditional way, self-employed customers, and then they started to underwrite them using account aggregator, the addressable pool increased by 7x. So we are seeing a lot of benefits that this infrastructure is bringing in. And I think the next few years are really going to be focused on people building out those experiences now that you have account and building out new consent experiences. I'm extremely excited to see how the set of account aggregators evolve. And we have account aggregators for individuals, account aggregators for MSMEs, the various types of consent experiences they built up. And so I think the next few years are going to be pretty exciting where we'll see a lot more action on consumer facing experiences, both by account aggregators as well as by the various financial institutions.
Awesome. We have one quick question, and then we can probably, sort of, thanks that together. But the question ideally is that, and it's probably a very important question, right? How account aggregator and account aggregator TSPs, that is FIP and FIU TSPs, are being treated, right? And the whole FIP, FIU TSPs involvement in data sharing between the AA and the AA TSPs. Essentially, I think what I understand by the question is that, hey, how different are these two? And how is the data sharing involved between an AA and the AA TSPs that exist?
Yeah, so I think people overcomplicate this matter. At the end of the day, data is, of course, fundamentally shared from an FIP via an A with the customer, and the customer may choose to receive that data directly on their device through an account aggregator or request for that data to be shared with an institution of their choice, like an FIU. Now, as part of that process, of course, there are different technology companies that exist. I mean, a bank will have hundreds of technology companies, right, from a CBS to people building business rules engines and so on. And then there are a set of technology companies that are particularly focused on the AA parts of the workflow. That's it. So that's point one, because I think people assume that TSPs are this whole new creation, which is not. I mean, banks have a lot of TSPs and technology vendors, and the regulators have already created frameworks around which banks can work with these technology vendors. And many a times they have accountability norms and other norms that they put in place where the financial institutions are responsible, even though they may partner with a TSP downstream. So I don't think there's anything new to those types of relationships, in my view. It's just as much as you may have cloud companies, you have CBS companies, you now have specialized technology companies that have built new application experiences and that are then offering that to financial institutions or account aggregators, as the case may be. They may offer new data governance solutions. They may offer new prediction solutions so that you can analyze the data better, underwrite better, monitor risk better. They may offer new workflow solutions. So we see a fairly diverse crop of technology companies being built on the back of the AA protocol. But it's much like other technology companies that the institutions partner with. So the regulator as well looks at it pretty much the same way. The end regulated entities are responsible for those ships.
Well, the very few interesting points that were made towards the end as well on with respect to the whole data sharing. Sid, thanks for joining in. Appreciate it. I'm sure as the new role sort of bestows upon you as the CTO of Sahamati, you'd probably do great wonders at it as well. From my side, I have a sort of a sort of a nickname for you as well. You're probably the Chief Security Officer of Indian Consumer Data. So essentially, all the data that goes by comes on to you. So thanks for sort of, doing this with us. Appreciate it. And I think the future of data sharing in India and then to the world looks promising and pretty bright. Thank you.
Thank